Hello, hello. It is Sunday, September 14th, and I'm going to be going through my weekly watch list and just telling you what I'm going to be looking for this week. So, of course, we're going to start with SPX as usual. So, let me just zoom in here a little bit. Now, before I actually get into any price details or any other tickers that I'm looking at, I do want to go over what events we're looking at this week. So if you're not aware, we have a pretty big one on Wednesday. We have our next Fed rate announcement, which is scheduled for 1 p.m. Central Time. Now, I'm not expecting a lot of market action around that. It doesn't mean that we won't move at all, but I think for the most part, that announcement is already baked in. Unless, of course, we do get some sort of a surprise, but we are expecting to have a rate cut this time around. So as long as we get that, and as long as it's not massively more of a cut than what is already being expected, I think we'll see a move. But I don't think it's going to be anything massive. I think it's already baked in. That said, we always want to keep it in mind and be prepared. I also think we might not see a ton of movement leading into that event. I think it's probably pretty likely that we do hang out in this area right around 6,600. Now, we made that new all-time high. By the way, we had 3 all-time highs in a row this week, which is slightly unusual. I think typically what we see is more like 2 in a row and then a pullback. This week, or last week I should say, we actually got 3. We got one on Wednesday, on Thursday, and on Friday. And I actually had a slightly bearish butterfly that expired on Friday. I wasn't looking for a huge pullback. I just was not expecting to see another new all-time high. So I was actually targeting this level right here, 65.60. Almost made it to where we could get a double on that butterfly. Unfortunately, it didn't happen. No worries. We actually got some really nice profits on a butterfly earlier in the week, so it's all good. Can't win them all. But anyways, all of that to say, we did get 3 new all-time highs in a row. So I wouldn't be surprised if we tested that all-time high at 6,600 again and perhaps just hung out there until we do get that rate announcement. The next thing I want to point out is Friday, which is triple witching. That happens at the end, that's OPEX at the end of every quarter. Tends to be bearish. Also, the last 2 weeks of September are statistically bearish as well. So I wouldn't be surprised to see a little bit more of a run up. Maybe we even get another all-time high. Maybe we hit this snow line right around 66.30. Maybe that's the reaction that we get after the rate announcement on Wednesday. Who knows? But after that, I would be looking for a little bit of downside. Not a lot. I'm not looking for anything major, again, unless we get some sort of a negative catalyst, something unexpected. But just, I'm looking for normal price movement that should occur within these normal cycles that we tend to see. So what makes sense to me is just this little pullback right to the daily 21 that could end up lining right up with 6,500. I think it's, that would be perfectly healthy in this market, and 6,500 is a really good place to pull back to and rest and pause and look for some new bullish setups. All right, so that's what I'm looking at in SPX for this week. Let's also look at some other tickers though. So this one, I'm looking at Amazon, and I'm actually looking for a little bit more of a neutral play. So if I just zoom out here a little bit, you can see that it's kind of not doing anything. It did have a great run up here until the end of July, and then it's just kind of been floating around. So what I would love to see is it continue in this range. There aren't any squeezes on it, not even intraday. So I'm considering opening up either an iron fly that is centered at 230, and it could just even be 10 wide, or an iron condor where I've got the call side at 240 and I have the put side down at 220. So yeah, I think it looks like price just wants to hang around in this price range between 220 and 240. So I'd want to see what kind of credit I could receive for both of those trades. But as long as it had a good risk reward and a good probability for that trade, I think that makes sense. All right, moving on, I would like to look at Robinhood. Now this one has a 2-hour and a 2-day squeeze, but I want to point out this daily sell signal that we got on Friday. So this is something that we were talking about in the small lot room. And this was actually a really fun discussion because Allison and I were both on the mic at the same time. We've never done that before. And I had a lot of fun. I think our members enjoyed it as well. I know Allison enjoyed it. And so I'm hoping that we can do more of that because it was really neat to just kind of bounce ideas off of each other and somewhat collaborate. But anyways, what we were talking about in that session is when you get these sell signals in what has been an otherwise really good, strong uptrend, in this environment, in this really bullish market that we've had, it's almost like a buy signal, right? It's kind of just telling you it's pulling back and this might be a good spot to enter. And so if you look at that, it did pull back and close right below the 1 ATR. If it can remain in this area, hold the daily 21, which is right here, maybe even hold this tree line at 111. I kind of like that for a buy. Let's see if we can get it back up to the all-time highs at 123, which is also that tree line right there. But this one looks good to me. All right, and then next up we have FITB, which I will only call it Fitbit now because of one of our members who has that stuck in my head. And it's really a bank, but I'm going to call it Fitbit because I think that's a better name for it. But this is another one. We've actually traded this one before. It's been in a great uptrend and it has settled right down. Right just above that daily 21. It has an hourly, a 2-hour, and a 4-hour squeeze. So what I like about that is that I can buy calls on this one because it's only about $45. So the calls are going to be cheap. And if I'm playing it with the intraday squeezes, the hourly, the 2-hour, the 4-hour, I don't have to go out as far in time, which means those calls are going to be cheaper. So that's another one that I'm going to be looking at this week. Now Shopify, this is one I pointed out last week when I was going through my watch list. I said I was going to keep an eye on it because I wanted to see if it could pull back to the daily 21. And sure enough, it did. And look at this. It has a beautiful daily squeeze with rising momentum. That looks beautiful to me. So if I could get into that on Monday or Tuesday, I would be targeting this fire line right up here at 152 is my first exit, and then possibly even a little bit higher so that we could bust through those all-time highs at 156.85, maybe target 160. So not sure exactly how I'll trade that. I'll have to look at the option chain, but either a call debit spread or a butterfly, those are the two strategies that I would be looking at first for Shopify. This is another one, DoorDash. This is another one that I was looking at during the watch list last week. Didn't get into it. Kind of wish that I did because it did start to come up. But thankfully, it is still in a beautiful daily squeeze. It also has a 2-day squeeze. And yeah, I would probably be targeting this tree line right up here at just below 270. But that looks beautiful to me. And then if, let's see, I'm not sure if I pointed this out last week or not, but I think I did. It has this beautiful double bottom. You could call it a cup and handle, but that's a great pattern that combined with a squeeze, it could really explode. So of course I would want to go out a little bit further if I was looking for something really lofty, but I think this is a beautiful pattern and I would love to get into this one, assuming that price is still looking good for me. All right, the next one I want to look at is Altria Group. Now, it does have a daily squeeze, but right now momentum is heading lower. So this is what I want to pay attention to while I'm watching this one. First of all, does it maintain this daily 21? And does it stay in between the daily 21 and this one ATR? So I want it to remain in this little range right here while I also start to see this histogram show me some rising momentum. If all of those things can come together and happen, then I would love to get into this one and then possibly target 68 or 69. It also has a 30-minute and a 60-minute and a 4-hour squeeze. So there's a few different ways that I could play this one once I do get that signal. And what is my signal, by the way? So because it's got this this momentum that's going a little bit lower now, I want to, we call it a slingshot squeeze, where what we're actually looking for is this momentum to kind of go like this. And then once we see the yellow histogram bar, that's when we see that, okay, momentum is starting to go up. It's starting to move higher. To me, that's my buy signal. That's when I can get in as long as all of that other criteria is met, where price remains in between the daily 21 and the 1 ATR. Once I get that yellow bar on the histogram, that's my go signal. Okay, so there are a couple of different ways that I can play it. I can play it longer term, playing the daily squeeze, or I can play it for just a week or two out, looking at that 30-minute or hourly squeeze. So a couple different ways that I can go about it. I'll just kind of have to evaluate once I see where it's at and once those opportunities present themselves. All right, last one that I wanted to show you is match. So if you haven't noticed yet, I'm kind of looking at all of these same patterns, right? The things that I look for, my setups, I like to keep it simple. They're all pretty much the same or similar anyways. I'm looking for that daily squeeze, rising momentum with price at the daily 21, where there's been a bullish uptrend. That's what I'm looking for. Really simple. This is classic JC, John Carter, swing setup. Doesn't have to be complicated. You can make a living off of this pattern. Of course, it's fun to use, to incorporate all sorts of different strategies and different patterns. And Lord knows John Carter is excellent at that. He is a master at being able to make profits out of all sorts of different patterns. But for me, and especially working in the small lot room, I like to keep it simple. And like I said, you can make a living out of this pattern alone. So I love this pattern. I think it looks great. In addition to that daily squeeze, it also has a 30-minute and an hourly squeeze. So once again, if I wanted to just play the intraday squeezes, what I would be targeting is just a move up to 38.61, which is where that tree line is. So it's not a huge move, but you don't need a huge move when you're playing the intraday time frames and you're only getting calls, or you're only entering into an expiration date that is a week or 2 weeks out. When you're looking at shorter time frames like that, you don't need a huge move. So if I wanted to play the daily squeeze, then I would want it to bust through that tree line and possibly get up to 40, which would be a new all-time high. So a couple of different ways to play it. But let's look at, just to kind of show you what I'm talking about, this is one that we traded last week, PYG. And again, because of that same member, Shane G, he called it Piggy. So that's, or maybe, okay, I entered it wrong. Piggy, PGY, there we go. So this is one that we traded, and we got great profits out of this one. I want to say we made about 80% off of this trade in 2 days. And you know what? I was only trading it off of the 30-minute and the hourly squeeze. So we got in, let's see, we got in right here on, let's try this again. All right, we got in right there on Wednesday at the end of the day. We got a little bit of a bump up on Friday, and then, or pardon me, on Thursday, and then Friday we got the larger move up that allowed us to fully scale out. But look at what a tiny move that is. We went from here to here. That's it. And we made 80% off of that. So when you have intraday squeezes and you don't go too far out in expiration, what does that mean, not too far out? I'm talking about either this Friday or the following Friday's expiration. When you're only playing intraday time frames, short-term expiration, you don't need a huge move to get big profits. It also was a lower cost trade as well, so we weren't risking a whole lot. All right, so yes, those home runs are so fun. If you were in Tesla, that was a fantastic move that it made on Friday. Congratulations. Those are great. These are the trades that keep the lights on, right? These, just get those base hits. You just need a few of these every week or every month, and then you are going to get those big money makers every so often. But the goal isn't to have those big, huge trades every single time. That's just like the cherry on top. Consider just getting these little tiny moves and making decent money off of that. And you know what? You'll be set. All right. If you want to join me in the small lot, if you're not already there, we would love to have you. I'm going to put the link in the bottom, down below in the caption, where you can try us out for 30 days. Make sure that if you do, you say hi in the chat. We'd love to have you. Everybody have a great week.